guys, welcome back to another episode of the Trading Coach Podcast. Today, I'm going to share with you a recent interview I did with Tom Farren for his Cryptonomy Podcast. Obviously, we're going to talk a little bit about trading, but we're also going to talk about self-employment and adapting the proper mindset, time management, and really how to keep adding challenges to your life. Now, again, the podcast title is Cryptonomy. You can check it out on Spotify and most other podcast apps. It's a brilliant podcast, so make sure you show Tom some love. All right, it's a long one, so let's get into it, and I hope you guys enjoy.
Welcome to the Cryptonomy Podcast. I'm your host, Tom Farren. This is a weekly podcast which drops every single Friday, which explores the cryptocurrency and global financial markets, trying to educate the listeners on the current affairs in the markets and giving also many take-homes which can improve your own trading. And Season 2 has brought guests, each who are active within the financial sphere, whether that be investing, entrepreneurship, finance, education or business, any kind of sector. And over this next hour or so, my aim is to help you gain an insight into their perspective and allow you to take some of the knowledge that they have learned throughout their career and apply it into your own life. I'm so happy to introduce my guest today as Akil Stokes. Akil has been one of my greatest influences in trading over the past few years. And not just me, he's taught thousands of students across his long educational career and has become one of the most respected trader/educators in the field. I think it's partly due to his open and approachable style. Now his attention is between his business Tier 1 trading, in which himself and other trader Jason Greystone are educating students across the world. He also has a podcast called the Trading Coach Podcast, which you definitely should check out. So Akil, I'm very happy to welcome you to the podcast. Is there anything else you wanted to add to the listeners from that introduction that will help you know a little bit more about you?
Hey, Tom, thanks for having me. No, that was a pretty good introduction. Made me sound really good, which I'm excited about. But I guess the only thing I would add is that I'm out there all over social media. I'm very approachable. So, if any of your listeners ever has a question or a comment, don't hesitate to reach out to me. And also advance, I apologize if there's any noise in the background. I'm having a lot of work done to the house, so hopefully it doesn't disturb what we're doing here.
Yeah, I have some noise outside as well, but we'll continue on. And first of all, I want to kind of ask, what's your kind of style of trading? So in terms of, we'll kind of start with the difference between swing trading, day trading, and scalping. What do you opt for there?
Between the two, I would say I am naturally a swing trader, and if the audience doesn't know swing trading is more of your longer term trading. You're typically in positions for maybe days to weeks. Day trading, you're typically in it from minutes to hours. You certainly want to be out of your position for the most part before the end of the day or the end of your trading session. And scalping is really kind of the short term in and out type of kind of, I guess the sexy trading people want to do, but as a retail trader, I honestly don't even think it's possible to truly scalp, just because of the spreads that we have. But everyone's different. But I would say I'm mainly a swing trader. I started off swing trading. However, I did fall in love with day trading once I started coaching. And really working with traders on more of a hands-on basis. And I do something called a live room where I trade live with them each and every day, kind of just taking them around the market. That brought the day trading style out of me, which is fun. And it has certainly allowed me to become a better trader just because of the pure reps that I'm getting in the market. But if I had to choose one, swing trading. I got into trading because of I wanted to open up freedom of time, and swing trading is what allows me to do that.
Do you think that you've adapted kind of your risk tolerance to suit your specific strategy? So in terms of swing trading is less stressful, one could argue, than day trading, and you've now gone into educating and teaching, so you had to go for the swing trading approach.
Yeah, yes and no. We have this conversation a lot about with newer traders, where should they start, swing trading or day trading? I personally believe it's more about fitting your trading around your lifestyle. Some people, they work a 9 to 5. They're busy. They don't have time to dedicate a certain set period to their chart, so they can't really day trade. Others do. for me, swing trading was good to start off with because it was slower. It gave me more time to really analyze the chart and double check my trading plan to make sure I was doing the right things. And I guess on a negative, you can say you have the chance to overthink as well, but I'd much rather have more time to prepare than be in more of a rushed environment where I have to be really, really sharp with my analysis, especially as a newer trader starting off.
Do you advise newer traders to start on these slower moving forex pairs, or to go to the faster moving ones straight away, or does it again depend on their style?
Well, I would start off by saying I would start on I would start off on the pairs that are the most profitable from their back testing. Different currency pairs have different personalities. Not all pairs, and as you mentioned, some are fast, some are slow. Not all of them are going to work the same with the trader's strategy. So when they go through the back testing process, first and foremost, they should be picking out pairs that actually work with what they're doing. If they are, let's say, a trend following trader and they're trying to trade a pair that mainly consolidates, so they're going to be in for a bumpy ride. But I guess within that realm of saying, obviously pairs that have a positive expectancy, pairs that are profitable and work with my trading strategy, I think it's really up to the trader. If you're swing trading, I don't think speed is going to be an issue. And if anything, I would say I'd rather have a faster moving pair. I'm looking at a pound yen chart right now. That's a good example of one. I'd rather have one like that versus say something like a euro pound, which just offers very limited opportunities because it's so slow. Because as a newer trader, that waiting game and waiting and not being able to take anything, that's what typically triggers a psychological mistake where they feel like they need to be involved. And that could be more hurtful to your trading than the risk of maybe missing an opportunity because the market moves too fast.
I think there's patience and then there's patience, isn't there? If you're picking a slow-moving strategy, swing trading, or you have to have more patience with it, there's less opportunities, and then you're picking a slow-moving pair, you have to be very, very patient, and that's something that takes time psychologically for anyone in whatever career they choose. And if you're doubling down both on the slowness, in a sense, then it will be hard for new traders. Maybe mix it up in that sense. So maybe you go for the pound yen with a swing trading style, or even a day trading style, maybe with the slower moving pair.
Yeah, that's certainly, it's all about finding a balance is what I found. It's growing kind of a balanced portfolio. It's diversification, even if it's within, like I said, speed of pair, volatility of pair, even if it's with trading strategy. I've diversified my trading over the years, and that's been very beneficial to me.
So have you had to go from different pair, hop from one pair to the next pair, depending on different market types, different because over the years the volatility changes in certain pairs due to economic crises and different things going on. Have you had to change your kind of strategy in that sense?
Yes, I've learned that it takes a lot of adjustments to be consistently profitable. I became successful trading a single strategy, and as a younger trader, of course, after bouncing around for many strategies, but as a younger trader, I assumed that same strategy would work exactly the same forever, just because I didn't know any better. And as I've gained experience in the markets, I've learned that market conditions change, economic conditions change, and as the markets change, we must continue to evolve and change as traders as well. So I certainly think it's you can never settle in the markets if you think that you can just do one thing and it will work the exact same way all the time. You're going to be in for a big surprise. You have to be willing and able to adapt your style, adapt your strategy. That could even mean adapting the portfolio of pairs that you trade, or adding different ones in or taking certain ones out until the conditions change back in your favor.
I totally agree with that. And as you spoke about before, in consolidation markets, you might need to step out of that market for maybe a few months and step into the trending market, just because your strategy is suited to the trend continuation trades. To give an example, and then you maybe dip back into the market when it starts to trend again.
Yeah, and that's it's got to be done the right way. I think a mistake that many newer traders make is they try to do something such as that, but maybe not adapting, but they want to be a trend trader when the market is trending or before the market is trending. They want to be a counter trend trader when the market is consolidating. But the tough part is that, we don't know that the market is in trend until it's already trending. We don't know that the market is in consolidation until it's already consolidating. So
Yeah.
if you're going to be shifting your strategy that quickly back and forth, there's the massive risk of you becoming a trend trader after the trend is over, as soon as the market goes into consolidation. And then once you notice we're in consolidation, you switch from your trend trading strategy to your consolidation strategy, but now the market's back in trend and you're always one step behind the market. So I think there needs to be a consistent approach, in my opinion, instead of just straight up bouncing from one to the other. You work out a trading style where you can take advantage of both, where, you have the ability to trend trade, you have the ability to trade during consolidative periods. And it kind of evens itself out. And you make small adjustments in between, maybe how you take targets or how aggressive you are at entering based on the changes in market conditions. But I certainly think just saying I'm going to, go from one to the other, then to the next, could be very difficult just because conditions change so often and you have the risk of always being one step behind the market instead of being one step ahead of it.
Yeah, that's good advice, actually. It makes a lot of sense because I think I maybe overstated slightly when I was saying hop from one to another. I don't literally mean from day to day. I mean kind of as month to month as times change, and if you see different pairs being more volatile and that doesn't suit your strategy, maybe start to backtest another one and go through it slowly with patience, not just leaping from one to another.
Yeah. Unfortunately, a lot of newer traders do that. They'll try it and learn a rough lesson.
Exactly. Yeah. We spoke about balance before, and now you're a father of two, I believe. How has this kind of impacted your routine, and for the dads out there, for the mums out there also, but also for the people who have other responsibilities and maybe careers, they have different things that occupy a lot of their time. How do you kind of work that around your trading?
It's tough. I tell you what, life in general, the first kid was a massive change. The reason I became successful, in my opinion, is because of my work ethic. I believe I'm willing to outwork anyone. And when I first got started in trading, I made obviously worked in hindsight, but the stupid decision to kind of quit my jobs and go all in with trading. And I literally had, aside from, 7 hours of sleep a day, I had all day to work on my trading. So there was so much time I could invest in getting better. And at the beginning stages of my trading, that time was needed. And I kept seeing myself improve because I was investing more and more time learning, growing the skill, no different than an athlete just being in the gym all day working on their game. And I carried that over into when I started managing money and when I started teaching, just the ability to invest a lot of time, energy, and effort into my trading. And when kids came, a lot of that changed because kids, they become the number one priority. They really are. There's a lot of time that is taken out because you either need to deal with kids or you want to spend time with kids. You want to help the mom out. And I really had to adjust to the lack of time, the lack of sleep, the lack of energy that I can put into the market. So over the past, my oldest son is 4, he's going to be 5 this year. Over the past 4 years or so, I've really focused just on the skill and different tactics on how to become more organized, understanding that I don't want to make any less commitment time-wise to my family. That's the number one priority. So how can I make the best use of the time that I do have and be most efficient? And that's something that has helped massively in just time management and organization.
Okay. So I think you spoke about before, I've listened to quite a few of your podcasts, and you spoke about that when you got into the education game and you started to teach other traders, it took a lot of time away from your actual trading, and it impacted your trading negatively. So how did you kind of overcome that? Did you have to be more focused on specific tasks or be more efficient when you were working?
Yeah, the time management and organization goes into that too. But there came a point. It was probably a couple of years ago where I had to make a decision. What am I going to be? Instead of splitting my energy both ways because it wasn't working the way I wanted it to. What is my true cause? What is my true purpose? What am I going to value more? Is it going to be me as a trader and worrying, selfishly worrying about my P&L and whatnot and being as efficient as I can? Or is it going to be working with the clients and helping them achieve a level of success? And, and maybe having kids that change this and a lot of my life now is driven by purpose to my kids and my family. But for me, I finally accepted that, hey, the education side of things is what I value most. It is we were talking about the other day, the feeling I get from helping a trader become successful is a lot stronger and better than the feeling I get from a winning trade or a good month. And that kind of helped me set my priorities. So I've accepted the fact that my trading is going to take a hit. Now I'm still successful, still going to be profitable. There's no excuse for, like tanking and being bad, but you're just not as focused on the markets, on your personal trading, because a lot of focus goes on to helping clients. And I've accepted that balance. I'm still a good trader. I make a little bit more mistakes than I used to, just missing opportunities and whatnot because of the lack of focus. But I've become a much better educator. For me, I just value that higher at this point. But it took me years to really accept it. I didn't want to. I tried to make both work. It's just very, very hard to be the best at two different things when you're splitting your energy like that.
Yeah, because it's kind of a focus versus a multitask. When you were trading on your own, it was all around you. I don't want to say self-centric, but a lot of traders out there are kind of looking at the P&L, looking at their percentage and the pips, and it's all about their kind of track record. Once you open it up and you start educating, and there's other people there's different responsibilities, and so you have to find a way to split your time. And I guess it's a big, quite a demanding task.
Yeah, it certainly is. And again, and I think self-centered is the right word. It's not a negative, but it's like, hey, it's me, it's my trading. It's a commission-based job. Essentially, you eat what you kill. And like I said, when I first started, I was fully invested, 14 hours a day into trading. And it takes a lot of focus to be good. And when that focus is split, it's a little bit harder, a little bit more frustrating. But again, when I thought about it from a value perspective, and I really enjoy teaching, I really enjoy helping traders. I believe that's my purpose in giving back. It makes it a little bit easier to manage the kind of the missed opportunities when you see others taking advantage of them.
Yeah. Talking about kind of time management, I've got a few things I wanted to kind of ask a little bit of a quick fire round. If you give one or two sentence answers here, what do you do? Do you check the markets maybe before breakfast or straight away as soon as you get up, or do you allow a little bit of a time, a little bit of a grace period to wake up and give your mind a little bit space to wake up and then check the markets?
I give myself time to wake up. I usually give myself about a half an hour before I check any charts, aside from open positions.
Okay. Whilst you're working, do you have any music on? Do you have anything on in the background, or is it just silence?
Silence. I used to have music or like a Bloomberg or something like that, but I got shiny thing syndrome, so I get distracted very easily. So it's silence or like instrumentals, like classical music or some type of just like beats, no words.
Okay. When do you go on social media? What kind of times is it? Do you go on specific times in the day, or do you leave it open all day?
First thing in the morning when I wake up, I check emails and social media messages and stuff like that for about a half an hour until I open the charts. And then I'm on it different periods through the day, depending on how much I'm shamelessly promoting myself.
What's your kind of favorite medium to actually create content from? Because for the listeners, Akil creates content on Twitter, Instagram, YouTube, very heavy on there. The podcast, there's probably way more. What's your kind of favorite medium there?
Well, my personal favorite is I like writing, but no one reads anymore. So I gave that up. I like writing articles.
Okay.
It's something about just either putting the pencil to the pad or typing on the keyboard. Kind of, it just, I don't know, something about it. It just kind of allows me to unravel for the day. But quick answer, I would say the podcast, just because it allows me to be more open about non-trading related topics such as life and kids, and it's more like a journal for me.
Yeah. Do you still do any blogs?
I do not. I used to. Just it was no one was reading it, or not enough people were reading it. I like writing. It's, I don't know, something about old school, something about it.
So that's kind of it's just a hobby for yourself, some way to relax, maybe an intrinsic hobby.
Mm-hmm.
So when you are doing kind of things away from trading, does your mind ever wander onto trades, onto thinking about profit and loss for the trade, or maybe different positions or different setups, or do you kind of, once you finish work, you go into that relaxed mode?
I try to get away from the charts as much as I can. I coach track and field at a local university, so that is a way that kind of distracts me. But if I'm in an open position, especially if I know there's something going on in the day, it's always in the back of my mind. What time do I need to check it? What news events are on the horizon that I may need to manage it for? So it's on the back of my mind, but I'm not obsessed over it. I've learned how to separate myself from the market, so I'm not stressing and whatnot.
Yeah, I think that's a very, very, it's a big requirement really to have that work-life balance, and when you're relaxing, when you're spending time with family and friends or doing other things, you need to be in the present and not thinking about work too much, because then you become a slave to the charts, you become a slave to the work and technology. Do you kind of try to stay off technology when you're away from the charts? Because I guess that being on your phone, being on the laptop and the computer, orientated around trading, do you try and spend time away from tech?
Yeah, the best period in my life came from, I broke my phone a couple of years ago on New Year's, and because it was the holiday, it took like a week for me to get another phone. So I was without technology phone-wise for about a week, and it was just amazing. No distractions, spent time with the family. I wasn't obsessed with who's responding to me on Twitter, who's posting on Instagram. It was just refreshing. So I try to stay away from technology. I try to put the phone away, and I've been doing something called the Pomodoro technique, where I just time management and organization. But I'm like anyone else, man. The phone is right next to me. If I'm not doing anything, I'm clicking a button, I'm checking, I'm scrolling through. But I try to get away when I can, especially from trading related stuff.
Yeah, I mean, I listened to your podcast on the Pomodoro technique, and I actually put it into practice myself. So we'll talk about that in a second. But the last question I wanted to ask for the quick fire, what kind of clothes do you work in a sense? Is it shirt and tie, like a traditional businessman, or do you go for the casual? And I asked this because I'm thinking about kind of Mark Zuckerberg wears plain clothes all the time, and this modern entrepreneur, quote unquote, they wear kind of casual clothes. And so do you wear shirt and tie or the casual, and how would it affect performance maybe?
I can tell you a cool story if you allow me to use more than a few sentences.
Yeah,
okay.
Go for it.
So the quick answer is, I'm shirt and shorts, shirt and pants. I'm very basic. I'm very frugal. I don't spend a lot on anything. So I'm a basic t-shirt. If I have a cool one with inspirational phrase on it, I'll wear that. But I'm definitely comfortable at modern entrepreneur, where I don't need to impress anyone. I just want to feel good. But when I first started trading, it was really, really hard to really take trading seriously, treat it like a business when I was working from home. I didn't have a home office. There was no separation. I would literally roll out of my bed and my desk is right there. So something I used to do to get into the mindset was I would wake up each morning. I would shower. I'd throw on a suit and tie. I'd walk outside, hop in my car, I drive around the block, right? I'd come back. I hope to get the same parking spot. I lived on a very small one-way street, so people are always waiting for the parking spot. But I drive around, get the same parking spot, walk out, right? Walk back into my room, sit down and start trading to kind of simulate going into an office, into a business. And I look back, it was the most ridiculous thing ever. I stopped after about a month because the dry cleaning bill was an unexpected expense. But I think it worked. I think that separation from, hey, you're leaving your bed, wake up, you're kind of going to work. I think it worked as a newer trader, but I certainly felt like an idiot. Certainly felt like an idiot.
Because, it's definitely important to actually to wake up in the morning and feel like if you do leave the house, if you feel like you need to leave the house, then it gives you a bit more of a purpose. If you feel like you just got to stay inside. And yeah, that's definitely a funny story. And did it work, or did it work for that month? Or?
Yeah, I think it worked. I think I started taking it more serious. I think I started realizing I have to treat it like a job, even though I'm my own boss. I can't just kind of roll out of bed whenever I wanted to.
Yeah.
So I think it worked. I think it just, hassle of, I only had a few dress shirts and, I'm sitting in my room sweating in them, and, it wasn't worth it. But I certainly prefer, not working from a home office. I definitely prefer working. I'm much more efficient when I'm working in an outside office.
Mm. You just spoke about the Pomodoro technique.
Mm-hmm.
Just tell the listeners what that is and how you've implemented it in your own trading or your life.
It is essentially a time management technique where you're dedicating a certain small periods of time to a specific task, and then you're taking breaks. So the problem with me is, again, I have a workaholic nature. So I will just, I will do something until it's done, but I'll get distracted in between. So I'll have this task, and then I'll look on social media for 5 minutes, and then, I'll go back to my task, and then I look on social media again, or I do something in the house. I get easily distracted when I don't kind of put parameters on myself. So what I like about the technique is that when I set my clock, what is it? I think it's 24 minutes, 25 minutes. When I set my clock, I tell myself, okay, I have 25 minutes to specifically work on this task. And I know that after that 25-minute segment is over, I get either a 5-minute or 10-minute break. And knowing that 5-minute or 10-minute break, I'm not allowed to work, that's when I say, okay, well, that's when I'll go get some food, or that's when I'll go respond to an email or do something like that. So it keeps me focused on a specific task for 25 minutes. It keeps me focused on, I guess, the leisure, the other stuff I was getting distracted on during the break. And it's allowed me to become so much more efficient, because it's amazing what you can do when you're fully focused on something and not distracted. A task that takes maybe an hour, could be done in 20 minutes without the distractions. So I love it. I love it.
I definitely agree with that, because I've been thinking in the last few weeks how on the internet there's so much information out there, and if we only took if newer traders only listened to your content, for example, and didn't branch out into other areas, didn't ever watch another YouTube video, I feel like they would learn so much more, and their path to success will be a lot quicker. But because we expose ourselves and we're kind of trying to juggle, multitask, and take in all this information from so many different sources, and it's similar to what you were talking about there, because efficiency does fall down, productivity does decrease as we start to multitask. And using this technique, having that block of 25 minutes of pure productivity where you can get into the flow state. And it's also a little bit of a motivation I heard in your kind of voice there, that that the 10 minutes later, you're not going to be working. So it kind of motivates you for the 25 minutes to actually complete that task.
Yeah, 100%. Like I said, I still have problems taking the breaks. I still find myself kind of, if I'm like almost done a task, I'll work a little bit longer, which I guess you're allowed to do. But yeah, it makes it kind of like a game. It's like, oh, man, I have 20 minutes left. Like, come on, focus, lock in for 10 more minutes. And I like it. I really enjoy it.
Do you ever experience the kind of flow state where, I don't know how much you've read about this flow state, is a book. I'm not going to say the author's name because it's long and I'll do it in injustice, but I'm reading it at the moment, and it talks about this where there's no kind of distractions, like that you're not feeling hungry, you're not feeling tired, or even bored. You're fully focused on the task at hand. And from my personal experience, it kind of maxes out around the 3-hour mark. So I can, if I'm writing, if I'm doing something, after 3 hours, that'll be a time where I'm looking around and these things will be distracting me, the stimuli from the environment and different things. Have you ever experienced that in kind of looking at charts or producing content?
Yeah, all the time. And that's one of the reasons I like working from an outside office. It's kind of it allows me to be in that flow state. And it's also kind of a Pomodoro technique as well, where like I want to go home, but I know I need to get stuff done. Mm-hmm. And there's no distraction. There's no, there's no kids running around in the background. There's no, Daddy, are you done yet? Daddy, are you done yet? It's kind of pure work. And I'm like you. I try to. I'm really big on taking breaks. I understand the attention span that we have as humans. So I understand the importance of breaks and not getting overwhelmed where your brain turns to mush. But I love I love putting myself in different places. I'll go to, when I was writing and whatnot, I'll go to parks and write. I get a lot of my course material and content done when I'm on the road. I'm on the road about 30 weeks out of the year. So if I'm on an airplane, put the headphones on, just lose myself in productivity. And I like it until it gets to the point, like you said, where your brain has had enough and then it's time to kind of call it quits.
Yeah, you've got to also personalize that to yourself. I mean, I've understood that 3 hours is kind of my maximum, and then I have to take probably an hour's break at least. But then there's other people who could potentially go for even longer. There's different creatives out there in the world, whether you're an artist, a dancer, whatever, you could be going for hours and hours on end. And it's about just finding that personality and fine-tuning it to yourself. Mm-hmm. We're going to continue with the kind of theme of setting boundaries and kind of a resistance to limitation, but in a positive sense. And so something I actually messaged Akil within the last few weeks, actually, I said that what's his opinion on rule-based strategies versus intuition? And I said that something along the lines that for the last about 3 years, I've been around 80% rule-based. So the strategy which I use for foreign exchange and cryptocurrency, it would be 80% rule-based in a sense that, and you spoke about this before, the if-then protocol, where if something happens, if an event happens, then I know exactly what to do. That'll be 80% of the time. The 20% was kind of left to gut feeling, just kind of an intuition, an emotion. What's your kind of opinion on that? And obviously we've already spoke about it, but for the listeners, your ideas about a rule-based strategy versus that inner gut feeling and a bit of intuition.
Well, I think a trader needs to be 100% rule-based, but there are ways around that. There are ways to add that intuition, because intuition is real. And that's another thing I've learned in just my experiences as a trader. I've been trading for, how many years now? 2007, since my 13 years of trading. Yeah. I've learned that gut feeling. I've learned over years where I'll see stuff and I'll be like, man, we're going up. And someone will ask me, how do you know that? I'm like, I just, I've, like, something in my brain has seen this before from looking at thousands and thousands and thousands of charts, but you just can't put a feeling on it. And that's the intuition. And what I think people don't understand is that intuition is based off experience. Intuition is a skill in itself. There's a massive difference between someone like me saying, I have this feel that this is going to happen, versus someone who's picking up a chart on day one. There's nothing that's purely based off emotion and they want to do something. Mine is based off some type of experience, some type of observation that I can't quite pull from. So I think that the overall structure of someone's trading should be rule-based. We have to have parameters to stop us from, going off the rails. But something that I've done in my personal trading is I've created lots of outs for me in my trading rules, meaning there are different variations of rule-based trading tactics I can use, from the very aggressive to the very conservative. And the intuition that I see in the market, I still personally can't just like see a trade and be like, man, we're going up, buy it right now. But if I have that type of intuition, I can then go to one of my very aggressive entry tactics and get involved that way. Or if there's another trade that meets my rules, but I'm like, man, I have this feeling that, this doesn't look right, I can go to one of my more conservative entry approaches. So I have that flexibility, but I still have to work within that rules-based parameter. I just can't get out there and do anything that I want. And part of that also comes from being a teacher. You imagine it, from being a coach and a teacher, we're trading within a glass house. Everyone sees everything we do. It's fully transparent. Yeah. How am I going to address a student who asks me, hey, why did you do that? If I don't have a reason why. It's unprofessional for me to just be like, I just thought it would go up. Well, if Akil thinks it's okay to do that, well, now it's okay for me to do that as well. And now it's not being a good example. So that's a little, I'm in a different situation than most traders, because I have that extra responsibility. But I certainly believe in, certainly believe in intuition. It's a real thing. And I think the best way to deal with intuition is to continue to work on figuring out why you have this feeling, what you're pulling from, and then eventually turn that into some type of rules-based tactic that you can use consistently.
So you spoke about conservative and aggressive entries, strategies. How many strategies do you have?
I don't know. I've gotten away from the word strategies. It's just I'm a price action trader. So I don't like to think of myself as trading a specific strategy because there's so much flexibility within it. I like to think of myself as just being, I am a technician. I am a chartist. I am someone that evaluates what is happening on the chart, and I can use different techniques or tactics to get involved. It's hard because it's so, again, with price action trading, there's so much I can do. I can trend trade, I can counter trend trade, I can trade advanced patterns. I use an indicator for help, for kind of confluence and whatnot. So it's hard to, it's not like, hey, each separate individual strategy. It's more of a buffet of tactics that I can use in the market.
Yeah. It's an overall approach. Yeah. So in terms of, like, you don't say that I have a trend continuation strategy, and if the market retraces to the 61.8 Fibonacci, I will do this. It's more just, am I right in saying it's more open, it's more fluid, and you kind of use your confluences, maybe your support and resistance, your Fibonacci, and then build it all into there. So would you take a trend continuation and then a following counter trend and the next trend continuation?
Oh yeah, yeah, all the time, and it goes on. Like I said, it's fluid. It's based on analyzing the market. So it's a 4-step process: identify, predict, decide, execute. It's looking at the chart. It's identifying what is happening. Where's the market trading at? What has price done? It's taking that information and making a prediction. Okay, because this happened, because I identified this, then this is what's most likely to happen. Predicting what direction price is most likely to travel to or in, predicting the level in which price is likely to travel to, and predicting kind of the method that price is going to take to get to that level. Is it going to go straight there? Is it going to retrace first and then go there? Is it going to consolidate, then break out? And then taking all of that information and deciding how I want to trade it. And it could be, depending on where price is at, it could be different things. It could be, okay, price has a lot of room to go higher. Let's look for this trend continuation trade and ride it up. Or price is almost at that level where I predicted the trend continuation trade to go. If it gets to that level of resistance, then I'll look for a counter trend move and catch a little bit of relief. So it's the same, and that's what I'm trying to get across to our traders. I'm getting away from, I'm a trend trader, I'm a counter trend trader. Obviously those approaches are there, but it's in general, it's looking at the market the same exact way, no matter what type of trader you are. A trend trader and a counter trend trader should be analyzing the market the exact same way. The only difference is how they're approaching it. So the target level for a trend trader could be the entry level for a counter trend trader, and vice versa. But the analysis at the core is exactly the same. What is price doing? What is price likely to do next? How and when can I get involved?
That's definitely true, because you can kind of complicate the charts quite a bit if you are drawing different confluences on areas, and then you're looking for the counter trend and the next move. You can make the chart very noisy and very busy. You spoke about before you were a little bit of a minimalist. Do you kind of keep your charts quite slick and clean in that sense, to try and, when you approach the market in the morning, you check the market, you kind of know what's happening and you understand that, and you don't have to do loads of analysis every single day then?
Yeah, clean charts, naked trading. You asked what I wear earlier, naked trading. But it's price. It's price. I do use I use two indicators. One is shown in my chart. One is hidden because it doesn't need to be seen. But I use the relative strength index. That's just the indicator of my choice. But it's price is number one. I've even seen myself. I used to use Fibonacci's a lot more, extensions and retracements. I even see myself not even using those as much. It's really become price, and it's funny, I've kind of gone backwards from trading a more complicated strategy and not really knowing about price, to really understanding the importance of the story that each individual candlestick tells me, and really interpreting each of the market's move. And I don't trade a really large portfolio, so I like to think that, I know the markets, the ones that I trade, at least like the back of my hand. I know exactly what's going on at all times, and that just, I know their personality, and that just helps give me an even greater edge in the market.
And every single candlestick matters. Every one that is printed on the chart is for a reason, and every single wick, it hit a certain level, a psychological point. It was supposed to do that, and it happened, and that means something. Every single action in the market means something. And it's interesting you said that, stripping it back to the naked charts, and I think that comes with experience. You see a lot of there's a lot of jokes online as well about beginner traders, how many lines, and everything they have in the chart. A lot of memes about it on Twitter.
Probably some of my old charts up there, I bet.
And as you do get the experience, though, you just tend to strip it back, because you are seeing it with your eyes. And it's something, for instance, like structure. You now, I and you, don't have to plot, don't have to write higher low, higher low, higher high on every single level, because we can see it with our eyes, and we can see it there. So we don't have to put structure on the chart, in a sense. Other strategies, I don't want to say strategies, other tools, trend lines, Fibonacci, whatever, sometimes you don't even need to put them on, because you can actually see them with your eyes, and you kind of train yourself to do that. Actually, it was about 2 years ago, I was listening to a video of yours, and there was a trader who said that, Akil, how can you see that is hitting the 60 Fibonacci? Do you remember that at all? You probably had many instances like that.
Yeah, I remember it started with, I'm at the point right now where I can, it's building my RAS, my reticular activating system, where, like you said, I can see Fibonacci levels without even drawing them on. And not all the time, but like if you give me a chart, I can tell you, I can pretty accurately predict where a 382 and a 50% and the 6-minute are at. And I remember that came from one of my trading mentors. We had a live event, and imagine this big conference room, and we're sectioned off. I'm in the back right. There's another trader in the back left. We're doing our things, and we have a big screen in the front of the conference room, or the auditorium, I should say, for kind of like the trade of the day. So whoever has like the trading idea, they project it up there. And one of my mentors was trading oil. He was trading crude on a range bar chart, and he's trend trading it. And he's like, he's making a killing. And, the crowd starts to wonder from back in my area to up to there. I'm like, why is everybody leaving? What's going on? And I pause what I'm doing, and we're just sitting there in awe. And he's like price move here, going to resell at the 382, going to take it off at the 127, 618 retracement, going to buy double back, blah, 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 sell this, buy that. And he's naming all these Fibonacci levels. And like, he has nothing on his chart. And this trader is, he was colorblind. So I'm like, well, maybe he's drawing them on there and like, maybe he thinks he sees them, but they're not actually on there. And he's doing this and just extracting, like money's just shooting out of his pocket from how much he's making from day trading oil. And we finally, we go to lunch. This was an event. So it was time to take our traders to lunch. And I go up and ask him, I said, hey, Todd. He's like, yeah. I said, good trading. But you were up there, you were naming all this like 382 and 618 and 127 stuff, but you didn't have anything on your chart, right? He's like, yeah. I said, you just making up. He's like, no, it was a 382 retracement. I'm like, dude, there's nothing on your chart. Like, what are you I'm looking at it right now. He's like, can't you see it? I'm like, no, Todd, no. Like, there's nothing there. So then he goes back through his entire kind of shellacking of the market, goes back and draws the fibs on, and they're exactly what he called them out.
Really?
They're spot on every single one. He's like, I told you, man. He said, but you can't see it. And it just like, from that moment, like that was, and this guy, excellent trader, one of the best traders I've ever met. He just, a pleasure to be coached and mentored by him. He was kind of the one that helped traders when pit trading dried up and people went to computers. He helped those traders adjust. And I kind of made it that goal to train my eyes so well that I can see these levels without even drawing them on. And fast forward how many years forward, I'm not at his level, and I never will be. But I'd say I'm about 90% accurate, and just because I use them so much.
Yeah. How many years experience did you have trading when you were with Todd in that session there?
That was probably. Is this counting years of experience bad trading too, or just good trading?
It's just like just trading, yeah, just trading. Just looking at the charts, yeah.
Probably about four or 5 years.
And when did you start to get that kind of foresight, not foresight, but you could see the charts, you could start to predict levels more than 50% of the time?
Probably about, I'd say about, maybe about 8 years in.
Wow.
Eight years. So it took a while, and it didn't start until when I started coaching more and sharing my charts. That's when I started kind of showing it off, because people would ask, hey, is that a 618 retracement? I'm like, no, it's not. Or is that a valid pattern formation? No, we didn't get that retracement. Well, how do you know? Well, look at it. And be like, well, can you draw on the fib? Like why? Like, can't you see it didn't hit it? It's just shy of it. Like, draw it on. Then I would draw it on and show them. And that's when it kind of hit me like, wow, like, so I might have been doing it before I even realized it, just by being able to see like, oh, we didn't hit that, or we did hit that. Now I still throw them on to check. I'm not that I'm not that cocky enough to risk money on my ego and being wrong. But it's a cool little game I play, and it's something to keep, it keeps things light. It keeps things exciting for me. Anything I can do to take the stress off of like, hey, I am feeding my family off of this decision. Anything to take my mind off of that is helpful, and it just makes it fun. And that's why I got into trading in the first place. It's enjoyable. It's a puzzle.
Exactly. Yeah. Talking about complexity and kind of challenges within the trading world, is there anything that you do to how can I say this? As you progress as a trader, or anything in life, any career, any action you take, that they get to a point where you need to add to the complexity to continue to progress? Is there anything that you do in terms of trading to do that? Or do you want me to give you an example of how I do it, and then maybe you can...
Go ahead.
For me, what I do every single month, the first of the month, I change the color of my candlesticks. So I think last 2 months ago was like the traditional green for a bull candle and red for a bear candle. June just gone, I had orange for a bull candle and grey for a bear candle. And then this month is like blue and I believe it's black. So I change the colour of my charts every single month. And the reason for that is because it trains my eyes to focus more. Because what happens is that when you're looking at the same thing over and over again, day in, day out, you start to relax a little bit more. Consciously you relax and you're not alert to the situation. And if you think back to hunter-gatherer times, if you were in an area, in a complex, which was every single thing in your environment and stimuli was comfortable, and you understood the different things. But then when you went to a new environment, there would be more threats and you'd have to be more alert and more conscious. Bringing it back to trading, so I kind of changed the color of my charts to help me focus more and help me see things maybe I didn't see before, the wicks, the little open and close and things like that. Is there anything that you do to keep challenging yourself?
That's a good point, and I'm glad you mentioned that, because I've been reading a book that's been talking about the same thing, about the safety and whatnot. But I actually do that. I just never understood. I never thought about it in that light. I'll change backgrounds. I'll change colors. Not every month, but every once in a while. I just thought I did it because I get bored of looking at the same thing. So I do that. I just never actually realized there was a greater purpose. But yeah, I'll change backgrounds. I'll change candlestick colors, colors of indicators, just to keep things fresh and not stagnant. So
what was that?
Learned something today.
What was that book you're reading at the moment?
It's called The Culture Code. Something of highly successful groups, but The Culture Code.
Okay, and that taught you about kind of changing your environment to help you focus?
Well, it just talked about humans craving safety, and I've been doing a lot of research on this over the last, not a lot, but I've been reading up on this over the last couple of years, kind of what you said about how, I guess more in a sense, we've gotten, I don't want to say softer, but I guess we've gotten softer as human beings because we've eliminated most of our threats, so that attention span of like being aware of all your threats in your environment isn't the same. Now, I think I'm naturally paranoid, so the first thing I do when I step into it, I look at anything that may be suspicious. I think that's more of, I'm from Philadelphia, PA, not the greatest city in the world, so maybe part of it comes from that. But I've been looking at that topic for a while, not necessarily trading related, but just in life related, how I don't want to say we're becoming softer as humans, but we're not, our instincts and the senses that we used to share with animals are becoming less and less, simply because we don't use them or require them on a daily basis.
Yeah, and we've added so much excess to that. We've got so many materialistic items now that we've kind of lost touch with a lot of things like that. We've lost touch with our primordial instincts, I suppose. And you spoke about minimalism before there, or just kind of not purchasing all the fancy clothes and the suits, keeping the charts clean. It's kind of a modern day way to get back to our basic needs, isn't it? It's using technology to bring us back to that, in a sense.
Yeah, and I think for me, it's again having children help, because you see, especially, and children go through the same phase. When we teach new traders, we always talk about them going through 4 stages of trading. The first one is kind of the unconscious incompetence, where you're similar to a very young child, where you don't know what you don't know, and everything in the world is new. And being a father and seeing my kid go through that, where it's like he's just exploring, like, oh, this is a tree, like no idea what it is, but he's exploring the simplest things in life, a cardboard box. It's kind of helped me realize, hey, we're blessed with all this technology and whatnot, but pleasure and just pure joy can come out of the simplest things, not the material things, just life in itself. And that's been a big eye opener for me.
Definitely agree with that. How do traders evolve in that kind of 4-stage thing there? So
the first one is it's an unconscious incompetence. So basically, they don't know what they don't know. Where you're new to trading, it's shiny, you don't know what's good, you don't know what's bad. You kind of see stuff on the internet, and basically you're learning by experience. The first thing you see, you believe is right. So if you watch a video that says, "Hey, make $100 a day every day," or whatever, you're like, "Okay, well that's true." Or this specific strategy is the best ever. Okay, well he said it was, so why not? And then you kind of try it out and you learn from experience. And then you go to the next stage, which is competent incompetence, where you understand that you don't know. So the first one is you don't know that you don't know. Now it's like, okay, I know that I know that I'm doing something wrong. I don't know how to make it right, but I understand that what I'm doing doesn't work. And this is where a trader kind of goes after this stage. They go on the quest for knowledge. Let's really try to learn how to improve. And they're reading books, watching videos, taking courses, stuff like that.
Self-aware.
And then they get to the stage. Yeah, yep. They get to the stage where it's competence, where, okay, now I know what to do. I know what I'm supposed to do. I know how to do it. Now the question is, can you actually do it? And I think this is where most traders get stuck at, where they know how to trade. They know how to read a price chart. They maybe even have a strategy that works, but they can't consistently execute it day in and day out of the market due to lack of discipline, psychological issues, all the things that stop traders from being successful. And that's probably that is the hardest stage to overcome. Mark Douglas even calls it the kind of the boomer buster category, where they're not quite bad to go broke and blow their account, but they're not quite good enough to really gain a lot of value out of their trading. And it's tough. And finally, the last stage is the unconscious competence, where kind of like what we talked about, you're just running on autopilot. You have that intuition where it's like, man, I don't even know why I took it long, or, but I did it. I'm just like, my rules, I took it. There's no thinking about it. There's no hesitation. You're looking at a chart. You're like, oh yeah, we're going to bounce off this level. It's like, how do you know that? I just know. You're running on autopilot. You just become a money printing machine. And that's the ultimate destination. And that's when trading gets boring. When you're no longer like, oh my gosh, like, you see that big red candle? Oh my gosh, pound yen is falling. You're just like, yeah, we had a 3-2 retracement. It came in the structure, and it's supposed to do that. Like, what, you didn't see that? It's at that stage.
Yeah, it's supposed to do that. I think. Yeah.
Don't tell the markets I said that.
I think George Soros said something like, trading's supposed to be boring. I mean, I don't have the exact quote here, but trading is supposed to be boring, and if it isn't, then you're not doing it correctly, or maybe you're not going to be profitable. And yeah, it is going to be boring because you are unconscious. Then you're just following ingrained habits which have been built up over time, and you're doing it on autopilot unconsciously and just looking at the markets. You can see a 38.2. Even if the market is trending very fast, like on I don't know if you trade US CAD. We saw at the moment a very, very large fall. The bears took control, and there was a large decline in price, and the trend line was moving at a quite steep gradient. I mean, you don't have to be the best trader there to see that at some point there the market was going to pull up and start to move higher, and it has done today. And that's kind of an intuition. That's the fourth stage there, as you said. You just kind of know it's going to happen. And the similar thing happened to the Australian dollar, US dollar. I think it was last week. Again, the market was trading very, very steep gradient, and it was just that you're kind of seeing it before it's going to happen, and you don't even need anything on the charts. It's a naked chart. You can just see from the candlesticks that a retracement is due to come.
Yeah, it's like, I mean, if anyone listening, many of you, I'm guessing, are probably listening to this podcast on your way to work. It's like, how many times have you driven to work? I know I've had many times where, I'm driving to, a place that I frequent, and it's like, I don't even remember getting there because it's a 5-minute drive. I go out and make a left, make a right, stop, light, blah, 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 make a left, make a right, park. And you do it so much that you kind of become unconscious. And many times you zone out, you're listening to, you're thinking about whatever thoughts, and before you know it, you're there. You're like, when did I get here? You just unconsciously just go about your business.
And that is the flow state, really. I mean, it can be positively used for working, productivity, and whatever creative medium you have, or it can be, in driving. It's a flow state. It's where you're like, it's kind of like a zombie state where you just lose track of time, and then before you know it, you're there.
Nothing, exactly.
To just touch on the cryptocurrency markets, obviously you don't actually trade it on a daily basis, or I'm not sure if you invest in it long term, but trade on a daily basis yourself. What's kind of been your assessment from the outside looking in, the bear market for almost 2 years, and now what is pretty much confirmed the recovery?
You broke up a little bit. What pair were you talking about?
Okay. So I was just talking about the cryptocurrency market. So what's kind of your assessment from the outside looking in over 2 years for a bear market and then the recovery?
I'm not too familiar with crypto. The one thing I can say is that it looks, in my opinion, it seems to be, it's a very young market, obviously, and it seems to be a very emotionally driven market.
Yeah.
And it reminds me a lot of Forex not when it first started necessarily, but when we first had access to actually start trading it, where there's a lot of emotional moves. There's a lot of movement in the market, and then there's a lot of the kind of the pile on, everyone wanting to catch the move, which ends up, giving you these sharp, aggressive moves in the market. And then you see the relief, and you see kind of the taking of profit by those who by those who know what they're doing. And then you see the panic from those who just kind of hopped on the bandwagon and now don't know how to get out of it. So you see a lot of sharp movements up and down. And from what I've watched, really the only one that I've watched have been Bitcoin, just because a few of the traders I work with, we've done some technical analysis on it and whatnot. It just seems to be very emotionally driven. It seems where it's like you have your breakouts, the bandwagon hops on, and then you have your steep declines. And it's you got to be sharp, I guess. I've never traded it, but I mean, you've got to know. You got to know where you want to get out, where you want to get in, where you want to get out, and before you get caught in kind of the aftermath.
Even for the swing trading style, I mean, it is like very, very fast. It's probably 10x on the moves in terms of pips. I mean, probably maybe 8 to 9x that you see in the foreign exchange markets. Yeah, and so, and that's why kind of I'm coming a little bit back to the foreign exchange market. I'm kind of half and half in between now because of that. It's the massive volatility brings with it. It does bring profit, and it does bring a feeling of enjoyment potentially, and you're feeling like you've succeeding in a market. But also you've got to factor in the stress levels and also the when you're away from the child, we've spoken about before. If you're on the track field and you're teaching different runners, you don't want to be thinking about the price of Bitcoin. And if it is more volatile and the market's going to move like $1,000 by the time you've started and finished, you're more likely to think about it than you are maybe the FX market, which has only moved 25 pips.
Yeah, I mean, I wish the volatility were a very slow volatility year for the FX market. I think partially that is due to the emerging crypto market. I think it is. FX used to be kind of very similar to how crypto is now, where it was the new kid that very volatile, 10x moves, and now we're seeing that in crypto, and we're seeing FX markets. And they've always consolidated, but we're not seeing the type of movement that we're used to, and not the type of for action for newer traders that maybe they want to see in other markets. And I think a lot of people are they're moving to the next thing, and that's typical. We saw that with binary options and whatnot as well, so it doesn't surprise me. But I would guess that's one of the reasons we've had kind of a string of lower volatility in the Forex market since crypto really kind of came out there for the public.
And I think that in terms of your kind of trading, is this going to, if we do see more consolidation markets, is this going to impact your trading, or are you just going to change your approach?
I can do well in either type of market. I'm naturally a counter trend trader, support and resistance. So I'll be able to do just fine in a consolidated market. One thing that it will cut out, and I noticed that 2014 was a very low volatility year. This has been one as well. I take about, probably about, I would say like 4 or 5 what I call home run trades for the year. And those are just like bigger, longer term trend following trades where like this market has a lot of room to run. Yeah. I'm in it in the right direction. Let's get as much as we can out of it. And I'll usually hit about 2 or 3 of those a year. And those will give big jumps to my equity curve. So if you can imagine my equity curve being kind of just a slow, steady move from the bottom left of your screen to the top right, slow, boring, consistent, right? Nothing to go crazy about. Those home run trades are those kind of big leaps, and they happen usually about 2 or 3 times a year. What I've noticed is that I haven't had one this year. We're halfway through, so it's going to take away from. Well, I don't want to say it's going to take away from that. Those trades still exist, but the opportunities to catch those are going to be far and few between.
That's interesting to hear, because obviously Bitcoin has gone from the lows. It does correlate with Bitcoin in my opinion there. As money is taken out of fiat currencies and put into this new asset class, Bitcoin has obviously gone on a bull run this year.
What did it go? 3,000 to like 14, something like that? What was it?
3,200 to just shy of 14, yeah.
I remember looking at, I was doing some analysis of like a descending triangle on there and calling this was back at, I think about 6,000. It kind of met like a floor at 6,000. I was like, this has bearish break all over it. And, I'd never look at Bitcoin, but I remember doing some analysis and it broke. I'm like, oh yeah, I got the prediction right, blah, blah, blah. And then went like another year without looking at it. And then before, not a year, but like 6 months without looking at it. And before you know it, I'm like, oh my gosh, when do we get up there? It's amazing. Yeah. Like, I mean, yeah, it's amazing.
I think the technical analysis as well doesn't work. It doesn't work. It just doesn't work as well on the market, because it doesn't respect it as much as foreign exchange does at all. You could reliably backtest a Fibonacci move on the FX markets or a trend line, but in the crypto market, because we don't have that historic data so much, it doesn't respect it as much, and we smash through levels completely. I was calling the $6,000 level to be held there and for a resistance point and just to fall lower. Now we're up to 14,000. It's just nothing that I would ever have imagined, and you get into this state of speculation. It is a speculation rather than actually the asset being of correct value of worth. It gets into a period where if someone buys, someone else is going to buy, and it enters kind of a bidding contest then, and then the price just continues to rise and overinflates. Okay.
Wild, wild west. You got to know what you're doing. Hey, but that's where I would guess more, where more of that intuition comes in place, where it's like, hey, this doesn't necessarily affect the same I'm used to, but, I've seen this type of rally before. I've seen this type of, retest and hold. We're currently getting some, seeing some buying pressure right now, just looking on the daily, an indecision day yesterday and possibly a pin bar today. Maybe that's that intuition where you're like, man, I see that 2 tests of that level. Down at a 382, here's that retracement. And if you have the rules that allow you to do it, I mean, maybe that allows you to get involved.
Yeah, that's very true. It's very true. What's your kind of future plans? Kind of wrap up the podcast here. What's your future plans? What kind of content can we see from you? And yeah, that's.
Well, I have been working on a new course. I released a course last year, 2018, that I finished a year before teaching. I've followed myself as a different thinker. I learned differently than, that was finally put my way of thinking into a course where I taught others, and then honestly release it and people will think I'm crazy. And it really came out quite well. People love the approach. So I'm doing a follow-up on that. Just the first course is mainly talking about just candlesticks and like we mentioned earlier, the importance of reading and valuing each individual candlestick, being able to interpret the story and how to view the edge. And I want to take that to the next level and talk more about trends and how there is no true trend in the market. The market moves in fractals, and one trend could simply be a different piece of a bigger trend, and how it doesn't matter about finding the true trend. Rather, it matters about making the prediction on where price is going to go. So I haven't started recording it yet, but I've got all the content completed. So hopefully I'll have that out. My goal is a month if I stop procrastinating and then start setting my tomato timer.
So where can people find that? What?
That's going to be it's tier1trading.com. It's going to be one of our premier courses. I may do a launch. I got to talk to my teammates this Friday. I planned on launching maybe a tester version of it, meaning inviting maybe 100 traders or so in to kind of test it out and get their feedback just to make sure everything makes sense. So I may be doing that as well. But yeah, www.tier1trading.com will be included with one of the training courses that we have there. Right in the beginning, after the Foundation Course 1, this one will be called the Foundation Course 2.0 with some type of fancy title behind it.
And where else can the listeners find you? Different social platforms?
Everywhere on social media, Instagram, Twitter, at Akil Stokes RTM on both Instagram and Twitter. I'm on Facebook as well. I do ask if you're going to follow me on Facebook. Follow and search out Akil Stokes Trading Coach. That's where I actually post trading content. I have a personal page as well, but I try to get away from trading on that page. You'll see it on Instagram as well. I try to make it more about, show that life isn't just about trading. It's about the other things that I love. Yeah. But I'm all over social media, LinkedIn as well, I suppose. I just never check it. YouTube, obviously. And just don't ever hesitate about reaching out. I don't bite. If you have a question, I will answer it. I want to help traders get better. That's it.
Yeah, I would definitely second that because I've asked Akil a lot of questions over the years, and he's always provided free content on top of the content on YouTube. Definitely check out his YouTube channel and the Training Coach podcast as well. You didn't mention that, but I'm going to mention that for you because.
Oh, yeah. Thank you. I'm still new to the podcast thing. I'm plugging it.
Underselling yourself there, but no, definitely check that out because I've listened to quite a few episodes and I did actually enjoy it. And every single episode you seem to take value from it and learn something from it, whether it's the Pomodoro technique or something else. Definitely take something from it every single episode. So check out that YouTube and podcast. Akil, is there anything you wanted to conclude with for the listeners and before we wrap up the podcast?
No, I just want to say I appreciate you having me on. As you can imagine, I do a lot of these interviews and whatnot, and this was a very fun one. Some of them get awkward and weird. I love the way this one was an intelligent conversation. It was, I think, it was very valuable for your listeners. I know it was valuable for me. I learned something of value. So it's just I appreciate you giving me the opportunity to be a guest on your podcast, and then hopefully some of the listeners of my podcast now come over and become subscribers to yours as well.
Yeah, well, thanks a lot for Akil for the conversation. I've definitely learned a lot from it myself, and I'll go over it a few times and take the little nuggets you share with the listeners all the time.